All right, all of you that are on the sidelines waiting for interest rates to drop to buy your house, you could be making one fatal mistake in your home buying journey. And I'm going to explain to you why in this video. So make sure you stay to the very end so you can make the best decision with your home buying purchase going forward. My name is seanu Uyehara. I'm an area manager with Geneva Financial, and I created my channel to help you understand the mortgage world and get your mortgage right going forward. So many of you are on the sidelines waiting to buy a house, and I totally understand that because rates more than doubled from June of last year. Now we're seeing rates around the 7% range, depending on what happens in the market every day. Sometimes we trend higher, sometimes we trend lower. Eventually, at some point, I do think interest rates will come down. I don't think we're going to see that until the latter part of 2023, if not the first quarter of 2024. But so many of you are on the sidelines waiting for interest rates to come down. Now, the mistake that you're making if you're waiting on the sidelines hoping for interest rates to come down to get back into the marketplace is that you're not saving money right now. And the reason that's a problem is because you have to understand the mechanics of what's going on in the real estate industry right now. There is a shortage of homes for sale on the market right now. And you can see here on this chart from the St. Louis Fed, we have about 563,000 available homes for sale in the entire country. Now, obviously, you wouldn't just divide that by 50 states, but if you did, that means there's about 11,000 homes for sale in each state across the country. That's not a lot of homes for sale. So if interest rates were to come down today, there are thousands of buyers that are just waiting for this to happen. And the mistake that you're making, like I mentioned, is that you're not saving up money. So when you think about supply and demand, when you have a low amount of homes for sale or a limited amount of widgets for sale, and you have a large demand of buyers in the marketplace, prices will always go up. And this is what we've continuously seen over the last several months, despite interest rates being at 7% and sometimes even higher than that. So many people thought that when rates hit 6 and 7%, it was going to totally stall out the market, but it didn't, because there's not enough homes to meet the demand that's out there in the marketplace right now. I'm hearing in so many parts of the country, Florida, Texas, Las Vegas, that there are multiple offers happening all over again. I had a client that wrote an offer in Florida. There were 61 offers on one house, and that took place in a matter of less than a week. Same thing in Texas. We're hearing clients that are making offers against 5 to 10 other offers. Same thing here in Las Vegas. So we're already seeing the multiple offer situation. And now again, the mistake you're making is that you're on the sidelines and you're not saving up more money. If you're on the sidelines, you have to be thinking about the next steps to get yourself back into the game, which, number one, you have to have more money to play with, because if interest rates were to go to 5% today, I've got probably 200 to 300 clients that I could call today to get them back into the housing game to go look for houses. But the problem is, if you're seeing 5, 10, 15 offers on houses all over again, like we saw during COVID, you need to have at least another $20,000 to $30,000 that you can play with. And if you don't have that, the chances of you getting a house is going to be very, very tough, because I'm already seeing it right now where sellers are pulling away their concessions, meaning they're not offering as many credits as they were last year. So if you go back to my videos during the winter time, I said this was probably the best time you could buy a house because builders were offering tons of credits. Sellers were freaking out because they didn't know what was going to happen to their house, and they were willing to negotiate. But that ship has already sailed. The market has already turned in the last 6 months, and we're seeing, again, multiple offer situations and sellers realizing that they don't have to offer credits to their buyers anymore. So you, as a potential buyer, if you're on the sidelines and you're not saving up money, you're not picking up a side hustle, you're not trying to eliminate debt, these will be the mistakes that will haunt you when interest rates come back down and you try to get back into the marketplace. You might be able to qualify for the house price that you want, but you're not going to have the extra cash to go above the appraised value and to compete in the bidding wars, and most of all, pay your own closing costs. So if this is you, make sure that you come up with a game plan. And if you don't know where to start, reach out to me. I'd be happy to put one together for you so you understand what exactly you need to do, how much money you should have, so that way when this market turns, you're ready to hop back in and you're not going to miss the boat yet again. Thanks for watching, and I'll see you on the next one.